A lot of dividend growth focused investors are all asking the same question so far this year. The question being, why is the SCHD ETF underperforming so much this year? In a time when the S&P 500 has had such a comeback and where it seems like almost all stocks across the board have been so green, SCHD is still not recovering or appreciating in price the way that a lot of investors would have hoped for. But don't worry, in this video we're going to do a deep dive into the SCHD ETF and see what's truly going on, and why I think that at this current trading level, this popular dividend growth ETF could offer a once-in-a-decade buying opportunity for long-term dividend growth investors willing to wait. Now stay tuned because we are going to go through all this and more. Right after you, please drop a like on this video and subscribe for more future content like this. Now let's quickly take it back all the way to the beginning and explain what the SCHD ETF really is. So SCHD, or the Schwab US Dividend Equity ETF, is an exchange-traded fund launched and managed by Charles Schwab Investment Management Group. It invests in public equity markets in the United States. It invests in stocks of companies operating across energy, material, industrial, consumer discretionary, consumer staples, healthcare, financials, information technology, communication services, and utility sectors. It invests in growth and value stocks of companies across diversified market capitalizations, and it invests in dividend-paying stock companies. Now, SCHD seeks to track the performance of the Dow Jones US Dividend 100 Index by using a full replication technique. Now, right here on the Charles Schwab website, it says that SCHD's objective is the fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Some of the highlights are a straightforward, low cost, and offering potential tax efficiency. The fund can serve as part of the core or complement in a diversified portfolio, tracks an index focused on quality and sustainable dividends, and invests in stocks selected for fundamental strength relative to their peers based on financial ratios. Now, some more quick facts about SCHD. The fund was started in 2011 and has over $48 billion in net assets, making it one of the biggest ETFs across the entire market. The expense ratio is super cheap at just 0.06%, which makes this ETF nearly free to hold on to. Now, SCHD has had a pretty rough start to the year. If we were to look at SCHD's total return, which is including the dividend and share price, SCHD is still down year to date, 1.02%, where the S&P 500 Dividend Aristocrat is up 5.16%. Now, the concerning part about this, and for good reason, is the fact that the S&P 500 itself is up 18.87% year to date. So when we compare the S&P 500's total return year to date compared to the S&P 500 Dividend Aristocrat ETF and SCHD, you can see that the dividend-paying stocks have not had a lot of love so far this year. But what's important to note is if you zoom out a little bit and look over the last 5 years, the S&P 500 has returned 75%, beating SCHD by a little bit at 71, almost 72%. And the Aristocrats have done pretty well over the last 5 years also, at almost 49% return. So looking a little bit deeper into SCHD and why I think it could be a massive buying opportunity is because it's still trading at pretty much halfway of the 52-week range. SCHD's 52-week range being $65.96 on the low and $79.49 on the high. So believe it or not all that long ago, SCHD was actually trading at almost $80 per share. And for more long-term focused investors that do have a bit of time on their side and do have time to wait out the storm, SCHD historically has always recovered and done very, very well as far as total share price appreciation. Just around 10 years ago, remember, SCHD was trading at around $35 per share, making the even recent $73 range about a double on the 10-year time frame. Also looking at SCHD's current dividend yield, the trailing 12 month is around 3.54%. And keep in mind, as of recently, the way that SCHD has been trading over the past few months, I was able to lock in a bunch of shares at almost a starting yield of somewhere around 4%. Which in my opinion is incredibly substantial because of the fact that SCHD does have a history of raising their dividends consistently and quite fast. At least they've done that historically. Looking at the Schwab US Dividend Equities ETF dividend grade and underlying metrics, the dividend growth rate 3-year CAGR is 12.33%, the 5-year is 13.92%, and the 10-year is 11.32%. Another fun way to look at SCHD ETF's dividends over time is to zoom out a little bit, all the way back in 2011, 2012. What's crazy is that SCHD didn't even pay $1 per share until the year 2014, where the yearly dividend was $1.04. But scrolling all the way up until current day, in 2023, SCHD is supposed to be paying around $2.81 or so And what's super interesting is that if we were to assume an annual dividend growth rate for SCHD of 10.03%, which means the dividend would double every 7.2 years. And again, this is all just an estimation. But if you look at SCHD's dividend growth rate over the long term, this ETF has been growing the dividend extremely fast, relatively speaking, of course. So even though the 10-year growth rate is 11, the 5-year is 12, and the 3-year is 14, if we use a 10.03% dividend growth rate, we can see that in 2024, investors could assume, again, just an estimation, that SCHD could pay $3.10 in dividends in 2024. In 2025, SCHD could pay $3.41. In 2026, the ETF could pay $3.75 per share. In 2027, $4.13. In 2028, $4.55. And what's pretty cool about this is that the power of compounding really kicks in, which means as the numbers get bigger, they get bigger and bigger, faster and faster. By 2029, in theory, this fund could pay $5 per share per year in dividends. By 2030, SCHD could pay $5.50 per year in dividends. And by 2031, $6.05. 32, we could see $6.66. And by 2033, 10 years from now, SCHD in theory, if the dividend growth rate stayed at around 10%, which again, isn't necessarily likely or unlikely, we don't really know what's going to happen. But let's just say it was to happen this way. We could see a $7.33 dividend per share from SCHD 10 years from now. So although that might seem super crazy to some of you guys, if you look back in history, SCHD in 2012 or 2013, look at what it was paying. It was paying 80 cents per share, 90 cents per share, and current day, it's almost triple that. So what it really comes down to, and the reason why SCHD is underperforming the rest of the market is obviously because of the majority of the holdings that make up SCHD, especially the top 10 holdings. Companies like Broadcom, UPS, Texas Instrument, Home Depot, Pepsi, Cisco, Coca-Cola, Amgen, companies like these have underperformed overall compared to the rest of the market this year. But for more slow and steady conservative investors like myself that are willing to wait out the storm and willing to hold on to around 100 or 104 companies that all historically paid dividends and increase their dividends, I think that SCHD is going to do just fine long term. Now, the last thing I want to go over is one of the biggest arguments I hear so many more growth-focused investors say when it comes to the argument, why not just buy into the S&P 500 versus SCHD? Who cares about the dividends overall if the S&P 500 has outperformed SCHD completely and will likely continue to outperform SCHD long-term into the future? Now, this is one of those conversations that I've heard time and time again, being that I've been a dividend investor for now around 7 years and have been pretty active in the online scene. This is especially a conversation that comes up once the overall market recovers from recent lows, let's say. Because then all of a sudden, all of the growth investors are all of a sudden geniuses once again. But I'll answer this and settle this once and for all, in my opinion at least, very simply. For more dividend income-focused investors that are more concerned and interested in receiving cash flow payments in the form of dividends quarterly ongoingly over a various time frame, obviously SCHD is going to return much more cash flow than something like the S&P 500. Yes, I will say long-term the S&P 500 does have a chance to outperform SCHD. Even though the S&P 500 doesn't pay as high of a dividend as the SCHD ETF, it still could outperform just because of the growth. But that being said, for dividend-focused, income-focused investors that are more concerned about cash flow, because again, everyone has their own investing strategy and everyone has their own needs and wants, the SCHD ETF will likely, and in my opinion, going to be the better option than just buying into the SPY long-term. Now, in an effort to be fully transparent, I also do own growth names that don't pay as high as a dividend of SCHD or other dividend stocks. And I tend to think that having a bit of everything in a very well-diversified portfolio with growth-focused vehicles, income-focused vehicles, and everything else in between is a well-rounded portfolio. I still do think that SCHD is going to be a great wealth-generating vehicle that offers consistent cash flow on a quarterly basis and is going to be the perfect fit for many long-term dividend growth investors from now until forever. But when it comes to the SCHD ETF and the way that it's been trading at least year to date, is this an ETF that you're currently still buying shares of, or have you, like some others, completely abandoned the SCHD Schwab US Dividend Equity ETF? If you enjoyed this video, make sure to please drop a like on the video and subscribe for more content like this in the future. Thanks for stopping by, guys, and I'll see you in the next one.